Hey guys, welcome to Podcast with Real Life School and Kyle Foyle. We are going to be talking about life insurance.
Yep.
Okay.
Yep.
It's a topic that's not really discussed in the younger generation. We're like, hey, we're young, we're bulletproof. It's kind of out of sight, out of mind. But how we actually got to know each other was I saw him on social media, like many of you look at other people. And I was like, hey man, I like your content, super knowledgeable. You understand a topic that many people have no idea about. So I just want to say thank you first and foremost for coming on.
Yeah, of course.
And that's how we met. It was just a random like, hey dude, you want to do a podcast? He's like, yeah, dude, I'm in. So yeah, man, I want to thank you for coming, and I want you to talk to us like, what is life insurance? Like, what is it?
Yeah, so great question. So life insurance is a contract that you have through the insurance company, right?
Okay.
And basically that's saying if I pay this monthly premium or if I make this monthly payment of, let's just say $100, right?
Yep.
Then I'll have access to these benefits.
Okay.
And that's basically what a life insurance policy is.
Okay.
Compared to like, car insurance, stuff like
Sure.
that. Yeah.
So you put in money each month, similar to a car.
Yep.
Right. And if you get in a car accident, then the insurance company is going to either replace it or pay to fix it because you're paying in monthly.
Right.
The same thing applies with life insurance.
Yep.
Okay. So, interesting. What is the difference between index universal life insurance, this new thing that I've been following you on,
Yeah.
and term life insurance?
Great question. So term life insurance, basically if you were to pass away,
Yep.
your beneficiaries get that money tax free.
Okay.
So if that person had $100,000 in coverage, then their family's going to get that $100,000 tax free.
Okay.
You can only use it if you were to pass away.
Okay.
And that's what most people have through work, which is like a term life insurance policy. Index universal life, that's a type of permanent policy, and it does come with different benefits. So one is the death benefit, of course. So if you were to pass away, your family receives that tax-free, similar to a term.
Okay.
But the two major differences, one is called living benefits.
Okay. I'm still alive. I'm getting benefits. Got it. Okay.
Yep, you're still alive. You could use this policy while you're alive, which is a beautiful thing.
Oh.
Yeah.
Okay, cool.
Yeah, that's why it's called life insurance for a reason, not death insurance, right?
Not death insurance.
Yeah.
Fair. Okay. With a term, are you able to, you're paying into it every month?
Yep.
Right? But when you pass, then your family takes that out, right? They get paid out.
Yep.
The index universal, the big takeaway is that I'm still alive, but I can draw from it as a loan or how does that work?
Yeah.
What are the options if I want to pull out some cash?
Yeah. So if you wanted to, because you get cash value benefits too. So if you grow your money from, let's just say, a 0 to 9%, 0% floor, you'll never lose any money due to market crashes, anything like that. 9% ceiling, so that's your cap, right?
Okay.
There's two options. So you can either take a withdrawal from your cash value.
Okay.
Like you're going to ATM, right? You have $100 in there, you take out $20, you have $80 left.
Yep.
And then two is a loan. Okay. So you're taking a loan in your cash value, and you could choose to pay that back, or it will come out of your death benefit if you were to pass away.
Okay.
Yeah.
Let me clarify that. So I have a $100,000 life insurance policy with the index universal.
Yeah.
Okay. I want to pull it out as a loan. I want to pull out $20,000. I can pay that back.
Yep.
Or if I pass in the interim of paying that back, then my heirs or the beneficiaries of that policy will get $80,000.
Correct.
Okay, got it. And what's the cash value? What does that mean? So that's the loan. What's the other option? What was the other option? I'm sorry.
The other option is the withdrawal. So if you're just like, hey, I want to take out $20K, then you actually take out $20,000 from your cash value.
Okay.
Now you have $80,000 left over.
Got it.
But if you were to take a loan, what's really cool is that it's uninterrupted compound growth.
What does that mean?
So when you take a loan out, your money's still going to be growing as if $100,000 was still in there.
Hold up, dude. Hold up. Wait a second. So I got a $100,000 policy.
Yep.
This is index universal life, right?
Yes.
Okay.
Yes.
I got a $100,000 policy. I want to pull $20,000 out as a loan on my own policy.
Yep.
I'm still compounding that interest between the floor of 0 and 9%.
Yes.
On 100,000, even though I removed 20,000.
Correct.
Dude, no kidding.
I know. Crazy, right?
That's actually pretty. So people can They can use it to pay off debt. Good debt.
Good debt, yeah.
Not to go in and rack up more credit cards or buy new cars and stuff.
Exactly.
This is, it's insurance policy. I mean, think about insurance, cars and all that stuff. It's for when bad things happen. Duh, right?
Yeah.
So you can pull that out and it's still on $100,000. That's awesome. Okay.
Yeah.
I know we were talking before the podcast, and I think the viewers need to understand like some situations or scenarios that you shared with me prior.
Yeah.
That other people can relate to that they may not talk about, out in the open, but I know you're comfortable talking about it, and it's powerful, it's moving, and it's firsthand experience. I mean, what better way to learn the value of it from somebody that's kind of been there and done it, right?
Right.
So the floor is yours, man. What's the first story?
I
What's the
appreciate
first story?
Well, as you can see, my GoFundMe shirt.
Yeah.
So the first story I'll tell you is when me and my fiance first got started in the industry, in the life insurance industry, we sat down with one of her mom's neighbors, and they were interested in getting a policy, of course, because they understood the value of it. And we got all their information, ready to get them coverage, and then they just back out very randomly. Went ghost mode. I was like, oh,
How old was she?
The mom was in her 30s.
Okay, and she was thinking about it for her daughter?
And for her daughter, too.
Okay.
And the daughter was 18 years old, bro.
Okay.
You know how we like feel bulletproof, like
Dude.
Nothing's gonna happen to us. We're 18.
Man. We're good, man. I'm 18. I'm 37, and I'm like bulletproof, bro. We're good.
Exactly.
Yeah.
What? You're 37?
Yeah, bro.
Nah, dude, you're 18.
How's the hair? How's the hair? Is it the hair that gives it away?
It's a hair, bro. It's a hair. But yeah, so they went ghost mode. Didn't hear from them. 2-3 years later go by, and my fiance's mom gets a phone call, and she's like, "Hey, it's from the same girl, her neighbor." He's like, "Hey, can we talk about the life insurance again?" And then her mom was like, "What happened?" That's a very random question, but it's always like, well, what happened?
Yeah, because we already talked about it. You didn't action it, right? And the opportunity was there, and all of a sudden, within a couple of years later, you get another phone call and say, "Oh, hey, let's revisit this."
Yeah.
So the natural reaction was something had to have happened to bring the conversation back.
Exactly.
All right, let's hear it.
So it was like, what happened? And she told her mom, she was like, "Hey, well, my daughter's disabled now. She can't feel anything from her legs down, and she's about 20 years old now, and they just bought a house for her as well. And so what they have to do now is that they have to sell the houses to help pay for surgeries, medical, anything like that."
How did it happen?
I don't know the exact details.
Okay.
I believe it's due to sickness.
Okay.
But yeah, she's disabled now. But if she would have had gone through with the policy, she would have access to the living benefits, which, again, let's just say the $100,000 example, right? If she would have had $100,000 in coverage, she would have access up to 80% of the death benefit while she's alive.
Yep.
So total amount of her policy.
Yep.
She would have been able to pull out 80% of that and use it for any medical expenses, surgeries, anything like that. They could have kept the houses. Who knows what they could have done with it.
So instead of having the policy when you were bulletproof, right?
Right.
She could have had access to $80,000 to cover the hardship at that moment a few years later.
Exactly.
Instead, major life changes, have to sell, an incredible asset, a home, had to probably go into debt, whether it's credit cards or taking out additional loans.
Yeah.
Not to mention the hardship of what she's dealing with at such a young age.
Right.
Right. So yeah, there's a lot of people that are out there in their, 18, 20, 20s and 30s that, we're bulletproof, dude.
Yeah.
Right. And it's never going to happen to me. But then all of a sudden, boom, you wake up, car accident, parents get sick, something happens. And if you're not, smart with your money, this is just another way to boast and boost your profile, your assets. Man, if they had just executed on that, they would have had that access.
Yeah, and that's just human beings. Like, we procrastinate so much.
Yeah.
And we know when things are good for us, we kind of just put it off or talk ourselves out of it. But it's crazy because we've had conversations with these families, with this family and with the daughter. Like, she worked at, like a Walgreens, you know what I mean? And we would go in there, we have conversations with her, going grocery shopping and stuff, and just seeing that happen. it's like life is going to happen to you regardless.
Yeah, it
you
is,
know what I
man.
mean? Either you're going to be prepared or not.
Right. It's
But-
just another avenue of being prepared.
Yeah, exactly.
And you're putting it into your own fund. So if something bad happens, because it does and it will, life happens, right? We're all gonna die one day, right?
Yeah.
But while you're living, this index universal is allowing you to pull out 80% of your cash value, what the whole policy is, to be able to handle things like that.
Right. Yeah.
And would you recommend doing this to go buy a car, or what? Like, you know, I'm trying to figure out for the viewers, like
Yeah.
what would be a good example? This is one because it was medical situation, right?
Right.
They're going to rack up a lot of bills, but would you advise somebody pulling this money out to go buy a brand new car?
With your cash value, man, I don't know. I feel like cars are more of a liability than an asset. You know what I mean? Like
100%.
I've had my fair share of buying cars. I'm just like, man, why did I do this? Like it makes you happy for like 3 to 6 months. You know what I mean? And then it starts to hit you.
New car smell wears out.
Yeah, new cars. But it just all depends on that person. Like if they want to buy a new car, cool, go buy a new car. If they want to put a down payment on a house, go ahead,
There you
put a
go.
down payment on a house. If you want to retire with your policy, cool, retire with it.
You have options.
You have options. You send your kids off to college with it. Start a company. I mean, whatever you want to do.
There's options.
Yeah.
Yeah. For this scenario, that was one to take care of her and get her through without bracking up a bunch of bills and
Yeah.
could have helped out. So I know you talked about a second story.
Yeah.
And
So
this one was close to home. So
yeah, this one definitely hit home. So my sister, she was going up to school in Prescott.
okay,
And
Northern Arizona area.
Yeah, Northern Arizona.
Okay.
If any
For all
of the
y'all out
viewers
there, yeah.
don't know where Prescott is, it's like a retirement place, right? But it's a nice town. But she was going to school up there for nursing.
Okay.
And she was driving a little moped, and you know how those are like super safe, right? Like,
yeah,
you
man.
don't need to wear a helmet or nothing like that, right? I wanted a motorcycle because I look up to her. I was like, man, I see her riding one. I want one too.
Yeah.
Not after this incident though.
Fair.
So what happened was that she was on her way home from school, and she got into an accident with a semi. And
Semi truck.
a semi truck.
Like an 18-wheeler.
Yes.
Dude.
Worst case scenario, right?
Of course.
Broke both of her arms, both of her legs. She had to be airlifted to a hospital. And then she spent the next 6 months recovering in a nursing home because Prescott's pretty small.
Sure.
She had to learn how to walk again and learn how to ride again. And, when that happened, like me and her have a relationship where we always joke things and, play things off and always find the light in it. So I was like, hey, I mean, you're like Wolverine now. You know what I mean? Because you got metal on your body. But shit, it wasn't funny then, but it's funny now because she's okay. But
Too soon.
she ended up racking up over $60,000 in medical debt due to surgeries and, all the treatment. And it took her 7 years to pay that off.
Holy smokes.
7
man.
years. And that happened to her when she was 23 years old, I believe. So super young.
Yeah.
Super young. And thankfully she's okay now. But if she would have had life insurance, I wish somebody would just, cold call her or knocked on her door or send her a message on Instagram or Facebook and just like, hey, have you ever thought about this before?
Right.
But that never happened. So that's
sometimes you just need to take a step back and say, life is going to throw some wild things at you.
Mm-hmm.
And we at Real Life School are constantly talking about how to preserve and to protect so you can grow, right?
Yeah.
So with the money aspect, this would be one of those ways where you're paying into it. She would have been able to take out that life. What is it called?
the living benefits.
The living benefits. So the $60,000 probably came with interest, right?
Mm-hmm.
You got to
definitely.
find the money, whether it's a loan or credit cards, to be able to pay for that. Now you're paying into this program and this process to be able to pull that money out and cover yourself when something happens. Not if. It's just a matter of when.
When. Yeah,
right?
exactly.
So that's a good story. Thanks for sharing with that.
Yeah, of course. Of course.
60 grand when you're 23 years old. Man, you're already trying to start out on this thing called life, trying to make a way, trying to, raise a family if that's your thing. And all of a sudden, accident, debt, hardship, struggles, breaking all the bones and stuff. So that's a perfect example when this would have kicked in. It would have been good to use.
And stress at the end of the day, like I find that most people aren't passing away due to physical reasons.
Yeah.
It's more like financial reasons.
Really?
Because, back then working one job was like enough. You know what I
Sure.
mean? Now it's like it requires 2 to 3 jobs or even 2 jobs and a side hustle.
Right, man.
So it's hard to outpace that when when you're paying against interest.
Yeah.
And when such a lump sum like that comes out of nowhere. So, and you're trying to recover, man.
That's wild, man. Yeah, you can't even fathom it. And here we are, we're young and we're healthy, and all of a sudden it's like, oh, why would I need that? Mm-hmm. Why would I need it? Well, a couple of good examples, Okay, so that brings me to my next question. Like, how do you get this index universal life insurance? How do you get it?
Yeah. Well, first of all, you gotta message me, right? No.
Yeah. Hey, you're the expert, man.
So you reach out to an agent, right? Find somebody that's licensed. Make sure they got a license, right?
Yep.
A licensed professional, and then set up a time with them.
Okay.
To explain the policies doesn't take long, about 5-10 minutes, and that's it.
Really? Okay.
Yeah, not long at all. So they'll explain the policies to you. What we do is a financial analysis for free.
Okay.
So we don't even charge for that, but basically we go over top financial goals, monthly budget, stuff like that. Because it wouldn't make sense to me to offer a $500 policy if the budget's only $50, right?
$500 policy if the budget's $50.
Yeah. So
what do you mean?
let's just say I run an illustration for the
Okay.
policy, right? And it comes out to be $500 a month
Okay.
due to the amount of coverage that you have and the type of policy that you have. With the IUL, let's just say it was like $500, right? It doesn't make sense if that person can only afford $100 a month.
Yeah.
It'd break the bank.
Yeah, right. Not
then-
financially. Yeah, it doesn't make sense.
No, and then they would just cancel the policy. So it's always mission over commission, right?
Yep.
So yeah, find the right agent, have them explain the policies to you, make sure they do a financial analysis and look through your finances for you to make sure that you can afford the policy that was shown to
That's
you.
awesome. Yeah.
And then what they'll do is they'll take some health questions, personal information, and then also, just basic information like bank account information, stuff like that. Make sure you submit the policy. It takes about a week to 2 weeks to get approved.
Okay.
But that's a misconception, is that a lot of people are just like, oh, I'll get life insurance when I want to, or I'll get it when I can, right? But you got to qualify for it. You got to get approved for it.
How do you do that?
So there's 3 different type of tests
Okay.
that they put you through. So one is the APS. That's a physician statement. So hospital history.
Okay.
So like any observations, treatments, overnight stays, your doctor's history, that will pop up. 2 is the MIB. That's medications.
Okay.
So
What do you take in prescription wise?
prescriptions,
Got it.
past, current, they'll pop up. And then 3 is your driver's history. So any felonies, misdemeanors, speeding tickets, DUIs, bankruptcies, anything dealing with money,
Yep.
like fraudulent activities,
Yep.
be hard for you to get a policy.
Yeah.
But after they run all those tests, that determines whether or not you get approved. That's why it takes a week to 2 weeks.
Sure.
They're
running the background check on
running
it.
the background
Yeah.
check. And so once you're approved, then perfect. You're able to get a life insurance policy, but then they give you a risk class. So let's just say like standard, right? You get that's standard. That's like the most common thing that people are approved for is just standard. Like you're healthy.
Okay.
right?
Yeah. I'm good.
Yeah, you're good.
Yeah, sure.
You qualify for life insurance. Here you go. And then once you make that first payment for your policy, boom, you're covered. And let's say if something happens to you next week, like you get into an accident, or 2 days from now after you get a policy, or if you were to pass away, that money's still going to pay out.
Really?
Yeah, as long as you make your first premium.
So I do the physician assistant's report. I go to they go to the hospital. They get all these documents.
Right.
Okay, that checks out. Great. You check out all my prescription stuff, drug history. That checks out. I'm not a wackadoodle in the car. Driver's history. That checks out.
Right. Yeah.
Then you push it. I'm not saying I've had my history. Trust me.
No judgment here. Don't
No
judge me.
judgment, man. Trust me. I got stories for you. So you push the package. It takes a week, 2 weeks, because they got a thorough analysis. The insurance company is not going to do or supply you with a policy if they know you're completely, you are high risk.
High risk. Yeah.
Okay.
Yep.
They're not going to do that. Makes sense. Then you make your first monthly payment. Then the next day, literally if something happens,
Yep.
then you have all the benefits because you had this policy and you're approved.
Yep. Correct.
Got it. Okay.
Yeah.
That's good news, man. That's good stuff. And it's just another avenue for people to plan and invest, because essentially it is an investment account. right? With this living option that you talked about.
Yeah, I would say it's more of like like a high yield savings, because investments, they lose money. You
Sure.
know what I mean? Like, you invest into a stock market, you invest into a 401k or IRA, you'll gain, but you also lose. That's a variable account.
Right.
In a life insurance policy, you'll never lose.
Yeah, 'cause
that
they cap it at
0%
zero.
floor. Yeah.
So just for people's education, the insurance companies will take that money, your policy that you're paying into every month, and they'll roll it into something that creates wealth, right?
Yeah.
Something.
Yeah.
So if they make 16% return on their money, which is your money,
Right.
they've capped it at 9%. So that's to protect them when the market falls.
Right.
They cap you at 0%, so you're not going to lose.
Right.
You're always going to be protected. But that above and beyond is what's to leverage when the market goes down in that interim, because the market's always going to go like this.
Yeah, like roller coaster. Yeah.
That makes sense. 0 to 9%. Hey, that's awesome. And then if you need to start up a company or you got medical bills, I mean, it's another way for you to build wealth and pay into something that's going to give you some return.
Exactly. Yeah.
And also protect the family when you pass, because hey, man, birth is the curse of death. We're all going to die one day.
Yeah.
You know what I mean?
Yeah.
So
that's facts.
that's awesome, dude. I wanted to say thank you for coming here talking about life insurance.
Thank you for the platform.
Yeah, dude. Yeah. And you know, this whole production wouldn't be made possible without our sponsors. So Diligent Entertainment made this space and this production possible, and then Real Life School, linking people that have been there and done it with people that are willing and able to learn. So, and PHP, People Helping People. Thank you guys.
Yes, sir.
I got a chance to sit with you, Kyle, and learn a little bit about you guys' business. I know Matt Sapal out there. I got to talk to him, former Marine. Hey, but yeah, so without these sponsors, we wouldn't be able to make this possible. And you're going to be available on reallifeschool.com. He's on Instagram.
Appreciate it.
Yeah, we look forward to seeing you guys. This podcast is on reallifeschool.com, and you can see all the shorts on social media, YouTube and TikTok and all this stuff. So, hey, we look forward to seeing you guys on the next podcast. Take care.